What's up? What's up? I'll tell you. I don't have to watch. I know the market's going up right now. So, as a recovering bear trapped in a perpetual bull market, let's say I finally learned my lessons, right? 2012, 2013, 2014, basically fighting the market, getting my head caved in, not accepting that I was wrong, all that stuff. Finally, just taking VWAP for what it's worth. First thing I noticed was stocks don't like to stay down if they break back above the VWAP. But what I also have learned is that the media is always late, always, right? And they're wrong, right? So when they're super, super bullish, you should be skeptical. But in a bull market, it's hard not to be right. That's why I hate bull markets when we're raging every day, because everybody seems to be right until we get volatility. And then volatility shows up, and then you realize how wrong everybody is, right? So the market crashed, past tense. Then Kramer says, hey, we're going to crash on Monday. And that was the bottom of the market. Then the guests start coming on, and we start talking about stagflation, inflation, reflation, every kind of inflation. But most important, recession talk, right? Recession. Fantastic. But my favorite part of this last catastrophe was unprecedented, right? Might have been unprecedented for what the president did. Never before has a president of the United States single-handedly attempted to crash the market and bring us into a recession. I guess that was unprecedented. But the market falling 20%, it was going to do that anyway this year. There was going to be a correction anyway. So the correction became a crash. It happens. 10% is your standard correction. 20% they call it a crash. We overshot to the downside. That's the faux show, bro. So do you remember the conversations we had? I said, hey, if the Qs break 492, we're going 475. 475 breaks, we go to 450. 450 breaks, we're looking for 420. We overshoot to 420, we're looking 395. We got to 398. And then look for the market to faux show bro around that price and look to buy back above 420. It happened rather quickly, and it happened on one big candle when Trump realized he was destroying the economy, and he said, all right, let's not do this. The market applauded. Basically, I looked at it as there's a song by Slick Rick where once upon a time there were two little boys who was misled by another little boy, and this is what he said: me and you, pal, are going to make some cash, robbing old folks and making the dash. They did the job, the money came at ease, but one couldn't stop. It's like he had a disease. He robbed another, and a sister and a brother. He tried to rob a guy who was a DT undercover, he said. So anyway, he slaps the kid runs away, and he grabs a woman, right? And he's thinking about killing the woman, holding her hostage. And then he rethinks it, and he runs on. That's what Trump did. So basically, Trump broke into your house and was holding your family hostage by gunpoint. He stole all your shit, but he decided not to kill your family. And now here they are on the internet, like applauding him for doing that. Nah, he just stole your money, pocketed it, and said thanks. But at least in this case, like I said, I'm not going to bullshit you. He called CNBC that day and said, tell everyone to buy the Qs right here. And that's what happened. And it was awesome. But more importantly, let's say you didn't buy that candle. That was on April 7th, 8th, or 9th, right? Let's say you didn't buy it. Then the media, right, because they're always Johnny-come-lately, right? They're always late. So after the catastrophe, they're saying, oh, it's going to get worse. No, it's not going to get worse. It's going to get better. And then when it starts to get better, they say, oh, no, you can't trust this. No, you could trust it. Because price tells you whether or not you could trust it. So there was an amazing amount of buying above 440, 314. Remember that price? Significant double top. We broke underneath it, and then we faux show broed back above it. And that became a new support level. But more importantly than support levels, what happened was sentiment, right? The bears, the ones who haven't learned their lesson, right? The bears that have not learned their lesson are still shorting, waiting for that next rug pull or that other shoe to drop or, oh, you'll see what happens next moment. There is no you'll see what happens next. It's over. And whether or not it's over, like forever, and that was a generational low that you put in, doesn't matter. If you're trading for the day or the week or the month or in the moment is ours. And it's bullish. And it's been bullish for weeks. Weeks. So now every pullback is being confirmed by support levels. Prior day VWAPs are holding up. Every time the market sells off, there's a buyer at every level. UVXY disintegrating on a daily basis. Everything you need to have to be bullish is here. If you choose to ignore it because the media is trying to feed you some bullshit, that's not how you trade. You trade what you see, what you could feel, right? The volatility's gone. Will it come back? I hope so. But right now we're back into grind the shorts and confound the bulls at the same time, because the bulls, they're afraid to get back in because they feel like they've missed this wonderful opportunity. They'll chase eventually. More importantly, the shorts who haven't covered, they're waiting for a pullback, right, to get out of their shorts. They're not looking to short anymore. They're done, right? So now they're looking at pullbacks as ways to cover. So the longs are looking for pullbacks to buy. The shorts are looking for pullbacks to cover. How are we going to go down? So if that changes, you'll see it. UVXY will start to rally above 32.50. Where is it now? 28 and change. UVXY above 32.50, there's your danger zone. 35, you're now thinking market could go down, but we're not. So you could just do what you're seeing. And now earnings reports are coming out, and after Tesla, bad news is being priced into the market. So the tariffs are priced in. You guys know that World War III is priced in, remember? Israel, Iran, shooting rockets back and forth at each other, and the market didn't budge that day. So World War III is priced in. And I'm not saying if a nuclear bomb goes off in Central Park, would the market not go down? Of course it would. But inevitably, that'd be priced in too. We'd have the Central Park restoration rally, or whatever it would be. No matter what they throw at the market, inevitably it always comes back. But the fun part is, most stocks still do suck. All those IPOs that came out, they're all dog shit, right? You just stick with the Qs, and miraculously, they're up, 80 points now off the lows, and they're consolidating it much